Good afternoon, everybody, and thank you for joining us today for our webinar, Business Recovery Beyond Basic Bookkeeping. This is brought to you by the Watertown Oswego SBDC office, and we certainly appreciate you taking the time to join us today. I think we've got a lot of great information coming to you. So I would like to introduce Amanda Stickle next. And Amanda is an owner of a bookkeeping business in Watertown. She has a bachelor's degree in accounting with almost 11 years of experience working with a variety of different industries in the accounting and tax trade. So she has owned her business in Watertown for 6 years. She's providing virtual accounting and tax solutions to service-based business owners throughout New York State and also a few in Florida. And she's also an IRS enrolled agent. So welcome, Amanda.
Thank you guys for having me.
Yeah, great. Well, we appreciate you being here with us today and sharing your knowledge with us too. I do want to start by asking you, what does it mean to be an IRS enrolled agent?
So it just means that I'm authorized through the federal government to be a tax professional, and I'm also authorized to represent tax individuals in front of the IRS if they need assistance.
Okay, great. Yeah, so I wasn't aware that that was, something that was required of bookkeepers too, but also that it really, you have that, you have that as far as, your professional credentials too for anybody that needs that help. So that's great.
Yes.
Yeah. So, so I want to continue on and get going with my specific questions that I have for Amanda today. And we'll start with just a very basic general one. Amanda, why is bookkeeping so important for the success of a small business?
So bookkeeping is really the foundation of a successful business. Without it, you have no idea what is truly going on in your business. It's important for keeping your business finances organized and easily accessible, which is important for so many reasons. Like if you plan to apply for the PPP loans, ask any sort of organization for financing, keeping up with knowing who owes you, keeping track of any outstanding bills you have, and just knowing your financial health and what is and isn't working in your business. It allows you to catch mistakes early in the year too, instead of waiting till the end of the year. So mistakes that you can catch easily, keeping up with your bookkeeping, is like if you forget to include a deposit in your record keeping, maybe you forget a receipt and you end up losing track of it instead of automatically inputting it. Maybe you categorize some office expenses as advertising expenses, so you're misclassifying expenses, and you'll be able to catch that quickly. And then on the opposite end, you could be entering things twice without having something in front of you to be able to keep track of everything going on in your business, and that can really skew your reports when you go to look at your reports. If any of those mistakes happen, I mean, it would totally misrepresent your financial position and negatively affect your ability to be able to accurately analyze your finances and create budgets. I think being able to create a budget is really, really helpful for your business to keep track of what's going on and where you need to make improvements during the year. So bookkeeping also allows you to be able to ease into tax season with a plan instead of throwing bags of receipts at your tax preparer in April and having no idea what to expect. And you're just like, I don't know. Here's a shoebox full of receipts. I don't know what I did all year. And then it also allows you to keep up with government regulations. It allows for easier audits if you happen to be audited. It helps you learn more about your business, and it gives you peace of mind, having everything organized and knowing where you stand financially. And also, poor bookkeeping is one of the top reasons many businesses fail. So if you aren't keeping up with bookkeeping, I want you to think about why not and what you can do to change that, and know that it really isn't as scary as everybody seems to think it is. It's really helpful, and once you have a plan and system, it's not as bad. And there are many ways to be able to keep track of your bookkeeping, depending on the size of your business and like your personality and what works for you. You could use things like Excel, pen and paper, just handwriting things down, going to Staples and buying a bookkeeping journal like the Dome journals, having an accounting software like QuickBooks Online. There's Wave. There's a few other programs out there, or hiring a bookkeeper, which is my personal favorite option. And if you don't plan on hiring a bookkeeper, maybe you're not at the point where you feel like you need one. I definitely recommend at least having an accounting software, just because it helps you. It's so easy to use and you can rely on it, and it connects all these different sources of your business all in one organized system. But regardless of the method you choose to, so any option of those you can use, but you should be keeping track of your every transaction, your date of the transaction, the expense category. So like if it's office supplies, advertising, accounting, job supplies, whatever you have going on, the vendor where you purchased the item. So like Staples, Lowe's, the cost, whatever you paid, and then just a memo of the reason. So if you went to Staples, you can write it was for printing supplies. So keeping track of those, and then at the end of the month, at least going through and totaling each expense category, and then offsetting or subtracting your expenses from your income. And that'll help you figure your profit or if you're at a loss. So this is just an example of a bookkeeping journal or register. So you want to keep track of your date for the transaction, the vendor name, the expense category, the amount, and then just memoing it to help you remember exactly what that transaction was for. And then keeping the receipts along with these is really important to do for audit purposes, tax purposes, and then just personal peace of mind to make sure you remember what's going on. So for example, maybe you went to Staples on January 1st and you bought some office supplies for $57.87, and the detail of that is you bought printer supplies. You can make it even more detailed, say like paper, ink, maybe you bought a new printer, whatever you want to say in the memo. And so yeah, that's basically what your journal will look like.
So Amanda,
Yep.
What you're saying is start off the expense category is sort of the bigger picture, and the memo would be the finer details. So as we all know, a lot of things can go into office supplies, everything from, paper towels to printer supplies. So what you're saying is when you're recording the expense from an accounting standpoint, office supplies is a big catch-all, and that's okay. But to make sure that you're keeping your own sanity, if you put printer supplies in there and then you see printer supplies again for the next 4 months, then that's a key or a clue to ask yourself, what the heck is going on with my printer that it needs ink 4 months in a row? Right? Am I getting that right? Is that what you're saying?
Exactly. Yep. And that's it's great to have that, especially when you're doing your budgeting and you can really dive down into each expense category and see what was spent. And like you were saying, if you're spending hundreds of dollars on your printer, maybe it's time to just invest in a new printer.
Right. So it's just a way to give yourself a quick visual clue to what those expenses are without necessarily running a report or printing a lot of things off or what have you. Okay.
Right. Yep. And same with the income. I have a couple examples down here. So these are going to be your customers, not your vendors. But having the catch-all, it's going to be construction income. And you're keeping track of who paid you. And then also in the memo, you're just keeping track of what exactly you did. Now, if you have an accounting system like QuickBooks and you're creating invoices, it'll all flow to your register once you receive the payment anyways. But if you're just doing it by paper or Excel, having it this way, it's helpful to keep track of what you actually worked on and what's drawing in income for your business, what services you're providing or products.
So then again, at the end of the year, you can say, wow, we built 12 decks this year, but we only did that one drywall install. So gosh, maybe we need to beef up advertising for drywall. It helps you, it informs many decisions and kind of strategies for your business.
Exactly. Yep. One question that I'm always asked a lot too is how often do I need to keep my receipts? Can I throw these away at the end of the year? What do I have to do with them? I definitely recommend keeping your receipts for at least 7 years. IRS can call on those anytime they want if they have a reason to. Just, you know, you could have filing cabinets, banker boxes, envelopes, anything to keep your receipts out of the atmosphere, to keep them safe. And it just helps you, even if you don't have an audit, it helps you personally as a business owner. If you have a question about what was this expense, you can go back and look at it. So it's good to keep those records.
Yeah, awesome. Yeah, so what I'm hearing you say is just, you know, bookkeeping ought to be almost a daily practice, whether or not you're doing it yourself or you're hiring a bookkeeper, but it's that, you know, maintaining and being prepared and not leaving it to the end, you know, is what's important. Yeah, and can help you in lots of other ways too. I think this is a really important question. How can business owners improve their cash flow?
For sure. And I know a lot of people are struggling right now. I think the best way is to have systems in place. So for example, having written authorization from your clients or customers, whatever you refer to them as, allowing you to collect and securely save their payment information. And you can find this like a template on Google, or ask your bank or credit card processing company for the form. And then it allows you to be able to collect your customers' payment information and save them, so that you can automatically charge their accounts on a designated date. You should still be sending them an invoice and then giving them a certain time to be able to review it, give them time to ask questions if they have it, and then charging them. So depending on what works for your business, you could invoice your clients on the 15th of every month and then automatically charge their accounts on the 1st of every month. So that gives them plenty of time to review and prepare for their automatic withdrawals. Then it gives you don't have to spend as much time chasing people for the payment, and you know exactly how much money you're going to have coming in and when. So it takes a lot of legwork and guesswork, and allows you to focus on income making areas of your business instead of, you know, chasing people around and the collection process of all that.
Anything else as far as improving on cash flow?
Yes. So sticking with your invoicing and your customers, if you didn't want to automatically do that, there's a few other options. You can offer discounts for early payment. You could ask for deposits up front. And then you could also, instead of waiting to the end of the month to invoice people, you could invoice them as soon as you complete the project or the product, whatever type of business you have, instead of waiting. Then it'll keep your cash flow throughout the month in motion with your business. And then on the opposite end with your bills, so you receive bills, and having a system in place will help you here too, because I think a lot of people receive bills and either as soon as they receive the bill, they send it out, they pay it, or they kind of hang on to it and forget about it. So having a system in place will help you with your cash flow that way too. So knowing that you don't have to pay bills as soon as you receive them. For example, a lot of vendors offer discounts if you pay on time or early. So the 2-10 net 30 that you might see on invoices, that means if you pay them within 10 days, you'll receive a 2% discount off your billed invoice. So here's a little bit more detail for the discount on any bills that you receive. So you'll see it shows up on different places depending on your vendor. Usually it's near the top, near your due date, and it just has these numbers and letters, and you're like, I don't know what that means. So that just means if you pay this invoice within 10 days of receipt, they're going to give you a 2% discount. So if you pay it within 10 days, you're only going to have to pay $980 instead of $1,000. And then I just showed some math. So you take 1,000 times 2%, it's a $20 discount. Subtract it from the total bill, you have $980. If you pay it after the 10 days, within the 30 days due date, you just pay the $1,000. And this isn't always the best way to do it. Obviously, it's not a huge discount. You're going to want to, like I mentioned, pick those 2 days a month where you're going to really sit down and pick the bills that you want to pay. And you just want to look at the due dates and see if they have discounts, see if they're coming up close to the due date. And that's how you're going to determine which bills you should pay. Because if you're not going to get much of a discount and you have other bills that are closer to the due date, it's not really worth picking this invoice over the invoices that are coming due. Because if you miss those due dates, then you're going to have late fees and it's going to charge you more.
So in order to take advantage of this discount, you have to really do the cost benefit analysis for your business and your situation on a month by month basis. It may not even be worth it to pay a very small bill early because you won't save any money, but at the same time, if you're saving $1, that doesn't really impact. But at the same time, if it's a small bill, you may want to get it out of the way first so you know that it's all been paid. So it really is it's something for each person, each business owner to really think about their own situation and whether it behooves them to look at all bills for a 210 net 30 savings or just the ones over, say, $1,000 or over $5,000. It's going to depend on the size of your business. And that's a great thing that you can talk with your accounting professional about, or you can talk with your SBDC advisor. Either, they can really talk you through what the pros and cons of each approach are.
And making sure you don't pay your bills late, because then everybody charges late fees, and that's going to negatively affect your cash flow. So my biggest recommendation, though, with bills is to pick 2 days a month. And then those 2 days a month, you're going to sit down and you're going to look at your bills and pick what makes sense for you. So say you pick the first Wednesday of the month and the third Wednesday of the month. And if you have your income set up, for sure you're going to have that $15,000 coming in on the first of every month. So just breaking that up into those 2 weeks. So say take 5,000, review your bills, check the due dates, see if there's bills that are going to offer you a discount for paying early, select those, and make sure check the due dates, see if they're coming up soon. You're going to pick those and break up that $5,000 to pay it periodically. And that way it allows you to be more conscious and aware of your cash flow situation instead of just being in the dark and kind of just throwing money around.
Yeah.
And then lastly, just having a realistic budget created can also be really helpful, and being mindful of reviewing your reports. Because just viewing, a lot of people think that they can just log into their bank account and check their bank balance. That's not really reliable or realistic, because a lot of people have checks or outstanding bills, or they're waiting on income coming in that they know is pending. So having the bookkeeping system in place will be helpful, because you'll actually have a realistic idea of where you're financially standing.
The next question I'm going to ask Amanda, if it makes sense here. And that is, how can small business owners save money, especially right now, when things are tough and there's a lot to think about. So. For
sure. I wanted to talk about the budgeting again, because I think that's really important for saving money, especially right now. I mean, we've been through a crazy year, but I think creating a monthly budget at the beginning of the year, it's still the beginning of the year, so there's still plenty of time. I think it's a helpful tool and resource to be able to help you save money. My recommendation is to look back 3 years worth of your records. If you are new, you just look at back as much as you can. Whatever has happened is going to be helpful information to be able to help you create a realistic budget with your goals in mind, to help you keep track of your spending and avoid overspending habits that maybe you've been in that's been an issue before. And especially including 2020, I know most of us had like a really unusual year. A lot of us have been negatively affected by COVID, but still including this information is going to be really, really important. And honestly, I think it's going to be a great year to actually look at, because I think you'll be able to tell more about your business than any other year, because you're going to know truly what worked or didn't work for your business looking at 2020. I think it helped shine a light on a lot of bad policies or habits that we had in place, and helped us really think out of the box as to help fix those situations. Also, having a chart of accounts that is realistic and relatable to your business will help you better understand your reports and create a budget. There's
chart of accounts, Amanda, by chart of accounts, what do you mean by that?
So like, for example, if you have a photography business, and you should be keeping track of your income related to your photography business. So having like your photography service income, and then like your picture product income. So separating it out that way. And then like your expenses, you want them specific to your business. So again, with the photography example, you'll want to have an expense that says something like prop expense and printing cost. So having a chart of accounts that is relatable to your business, and there's so many resources online and so many organizations that you can join related to your industry, and those are going to also be helpful for providing you with averages that you should be expecting in your first couple of years. So that'll be super helpful in your first couple of years of business to help base your budgets off of. And then, so how do you kind of look back at your reports to kind of figure out how to create a budget? You're going to want to look at your numbers and kind of just compare them against each other. So say we're looking at 2020 versus 2019, you're going to take your income from 2020 and subtract it from 2019, and you're either going to have a difference or a growth. I think a lot of us might be seeing a difference in that area. And then dividing that against the 2019 figures, that'll give you a percentage of what you've either grown or lost compared on the 2 years, which is really helpful with the PPP loan right now, because for the second round, you're going to have to show a 25% loss between two comparative quarters. So being able to have these reports are going to be helpful to that. And it'll help you analyze where you've spent money that maybe wasn't working for your business. So maybe you've been spending hundreds of dollars every month in advertising on social media, but you're not seeing any improvements in your sales related to that. So that'll help you realize that you need to reconsider how you're spending your advertising and put it somewhere that's actually going to be beneficial for your business. Or maybe it means you need to hire a social media marketer that's going to actually develop content related to your business and help you talk to your ideal clients better. So just, it helps you analyze where you've been spending money, and if you haven't been improving on income, it just helps you think more on track of what's going to help your business, instead of just continually doing that, continually throwing your money out and not having it work for your business. So pulling up 3 years worth of your reports, this is just a simple like profit and loss type of example. I think it's important to look at the average of what you spend over the past few years to help you determine what your average expense will be going forward. So to figure out average, you're just going to take the 3 years per category, add them up, and then divide it by 3. So we added $100,000, $75,000, and $50,000 for our income category together, and then divided it by 3 and found that our average income is $75,000. So when we go to do our 2021 budget, we know that our average income is going to be around $75,000. So we should probably be planning on a higher income rate, because we most of us want to grow our business, but we know we should at least be getting about $75,000. So planning for $100,000 again, or if we want to grow it even more, going even higher. And if we look down here, I kind of did another analysis where I just looked at 2 years to figure the growth that I had from 2019. And to figure that, you subtract 2020 from 2019, and then divide it by the 2019 number, and you find you've had a 33% growth. So we know our average number is $75,000 for income, and we know we have a growth of about 33%. So we should probably be budgeting about $130,000 for our 2021 income. And then just going through each expense and doing the same thing to kind of figure out where we should be at expense-wise. Okay, so on the next screen, I kind of worked out the expenses. The expenses are a little bit different because we can kind of cut costs a little bit. So for office supplies, I took my average and my growth percentages and figured what I should normally have, but I'm like, I'm going to cut that. I don't really need to spend as much in office supplies this year. I have more coupons, or I just got a new printer, so I'm not going to need as much ink. Same with the advertising. Maybe I've been doing something that wasn't working. I was spending way too much money on social media, and it wasn't helping my business at all. I wasn't getting any engagement. I wasn't getting any new customers from social media. So I'm not really going to spend any more. I'm just going to take what I normally spend and just use that more efficiently for my business. And then for things that are actually really connected to your income, like job supplies, you should flow the same type of percentages that we did to get the income budget. We saw that job supplies, we had averaged 35,000, but and it grew about 33%. So we're going to kind of plan for about $70,000. So that one's going to increase because it's really correlated with our income. The more projects we have, the more job supplies we need.
So this is really a place where business owners can play a little bit.
Right.
And create a few different scenarios. Well, so if I double my advertising budget, what does that do to my profit? And even if I doubled, or if I increased my business by a third, what will it take in terms of supplies? So yes, I'll have more income, but what is that? That may deplete some inventory I have that I need to replenish. So it's really a good way to get a spreadsheet going, or QuickBooks, or Dome accounting system, whatever it is you use, and just throw some stuff in there and play a little bit, have some different scenarios. And if you start out the year with one, you can always revise. You can always take, look back, and that's why it's important to keep those good records too. So you have your look back year. You can say, what did we do last year? What did we do the year before? And really put some thought into that and ask yourself the tough questions. What if my business did increase by 20%? What would that mean? Would that mean I had to hire someone? Would that mean I had to buy a new piece of equipment? So it's really budgeting, and creating these budgets are an important exercise for actual sales and for your strategic plan both.
Yep, exactly. And they, like you were saying, the budgets aren't set in stone. It's important to look at these monthly, and you can adjust things. If you see new patterns, or you see the economy is changing, you can go in and adjust your budget to make more sense to the current situation.
And that's a really important note. And there's no penalty. No, your accountant, your banker, the IRS, they're not going to say, oh no, your budget didn't meet your actuals. None of them are going to say that. All of them are going to say that a budget is a snapshot of your best guess. And so there's a snapshot which is only frozen in time for one period, and your best guess. It can be scientific as all get out, but it's still a snapshot of your best guess.
Exactly. Yep.
which is why you need to always look back and analyze what actually happened and compare it to your expectations.
Yeah, and it sounds like, again, it's so much of that, like being prepared and having your numbers there and doing that and having those systems, and then also being able to really, analyze that. Just the analytical piece of it is how businesses save money a lot of times, as far as seeing those trends and that kind of thing. Yeah,
exactly. Yep. So yeah, it'll help you analyze your inventory. If you're having too much on hand and you're just like not making any money off of that, a tip would be just to have a huge sale, get rid of that inventory. At least you're having cash flow come in, and it'll help you. Sometimes we just have to learn through mistakes. If you are product-based, I recommend trying to get your vendors to give you like a 30-day instead of having to pay up front. And then also calling around to different vendors and pricing things out. That's going to be a huge, it takes a little bit of time, but it's going to be a huge saver in the long run. And also looking back at these reports, it'll also help you realize if your expenses are an issue, then maybe it's your price point and you need to maybe increase that a little bit to help you make a better profit in your business. And then as far as if you have savings accounts and checking accounts, calling around to our banks and checking their interest rates. And for checking accounts, checking if they have maintenance fees or if they're going to charge you statement fees, and just kind of comparing fees and interest rates and kind of just getting the best option. Same with the credit card processing companies. If you're accepting credit cards, calling around and asking for rates, those can be confusing sometimes. So there is a fairly local company, Heartland. They explain things pretty decently, and they give you comparative reports too. So that's an option to kind of get the most out of your money. And then lastly, on this topic, while it seems kind of counterintuitive, investing in your business can ultimately help you save money in your business. For example, hiring a bookkeeper, it can end up saving you money in the long run because they know what they're doing. They have the background, the experience, the education. So they know how to keep your reports up to date. They know how to look at your reports and help guide you through understanding your reports and your financial situation. And then, like we were talking about in the beginning, how you can make mistakes easily in your bookkeeping. They are trained to catch those mistakes and avoid those mistakes. So that'll help you avoid paying tax liability that you maybe weren't required to. So it's helping you keep up on that. And then also they're helping save you time. So I've talked to so many business owners who say they spend, 5 hours a week doing their bookkeeping when they could be spending that time in their business, growing it, advertising, networking, actually doing whatever service or product that they are providing. So that helps you grow your business by being able to work in it more instead of worrying about your bookkeeping and keeping track of everything.
Yeah, right. I think that's a huge point. You don't want to hide behind your books when somebody else, who does it better can do it better potentially, if that makes sense. But yeah, that's a great point. Any business owner should be out there building business, and unless they've got somebody else doing that for them too. But it's really important to analyze that and what you're good at, and maybe where your weaknesses are, and where to hire professionals for that. And we'll talk a little bit more about that later too. Amanda, tell us a little bit about what type of financial reports that business owners should be reviewing, and how often.
Okay, so for me, this is a big topic. So, but if you are just want to do the bare minimum, and at least what you should be doing is reviewing your profit and loss statement at least once a month. When I'm doing bookkeeping, I like to look at your profit and loss, your balance sheet, your statement of cash flows, your accounts payables, your accounts receivables, your everything. So what your profit and loss is, it's going to show your total income, your total expenses, and then also the net income or loss. And this helps you really see if you're spending too much money compared to your income, and then it helps you determine if you need to make changes that way too, like we were talking about in the budgeting process. When I run the profit and loss, I also like to pull up a comparative report. So I'm going to have January 2021 up, and I'm going to see everything that I've earned and what I've paid out. And then I'm also going to pull up the January 2020 report and see if I'm having any patterns, or if something's really out of whack. And it helps me drill down to see if I'm normally spend like $100 in office supplies, and in January 2021 is showing like $500, it's a huge growth, and I'm not showing like a huge growth of income, I can drill down and see if something isn't going on correctly there. And like I talked about before too, it helps, you're going to have to pull up these reports too, because with the second round of PPP, you have to show that difference of 25% in a comparative quarter based off 2020 and 2019. So having those reports accurate and complete will be helpful. And then I figured I'd show an example of a really simple profit and loss statement. It's going to total, it's kind of pulling from that register that we just were showing. It pulls the total of construction income. So we had 2 deposits for $10,000 and $5,000. So we had a total income of $15,000. And then just totaling each expense, advertising, accounting, insurance, and office supplies, and then totaling it all together. So you have your total expenses. And then you're going to subtract the total expenses from your income to determine your income for the month. This is helpful because it'll help you see where your money went that month. It'll help you see if you're spending too much expense-wise and not bringing in enough income. It'll help you see if maybe there's some cash flow issues that you need to work on or improve. So it's really helpful to review the profit and loss at least once a month.
When you have put the parentheses loss, so can you explain to us what the parentheses mean, and just to make sure people understand that it's like putting a negative in front of the number, right? I mean, that's really what it is.
Right. So using the parentheses for a loss. So if we had $18,000 in expenses instead of $1,800, we would show a loss of the $3,000 or whatever, and it would show up in parentheses. We do that in the accounting world instead of using the negative sign, because the negative symbol can just get lost in all those numbers, and it's not as easily seen as parentheses to show that there's a loss. Okay. And that just means that you have more expenses than your income.
Okay, so the parentheses, if you see those on your statements, then you want to pay very close attention, because that means there's a loss somewhere.
Correct.
Okay.
Yep. And then, so your balance sheet, that shows your total assets. So like your bank accounts, any savings accounts that you have, any equipment, furniture, buildings, whatever you own that's yours is going to show up under your asset section of your balance sheet. And then it shows also your liabilities. So if you have sales tax, it'll show you your sales tax liability. If you have credit cards, your credit card balances, payroll liabilities, any loan balances. And then it also shows your equity, which is what you put into your business, or if you're taking draws out, it'll show where you're at in your equity. And then, so the statement of cash flows, that's kind of like a combination of your profit and loss and balance sheet kind of merged together, because there's items on that won't show on your profit and loss. For example, if you make a payment to your sales tax, that's not going to show on your profit and loss. So it's not going to affect your net income, but on the cash flows, it will show that money came out of your account and it decreased your sales tax liability. So it just shows everything. It shows literally the flow of cash through your business. So that's really helpful to analyze more your net profit if something's not completely showing up there. Looking at your accounts payable, that just making sure you're not forgetting about any bills and you're keeping up on those. Keeping up on your accounts receivable to help show you if somebody's forgotten to pay about you, you can send them a reminder invoice and like, hey, just wanted to let you know. And it just helps you keep track of everything so you can maintain your cash flow. Also keeping up on your bank register or your bookkeeping journal to ensure you aren't, duplicating anything, like entering your Staples receipt twice, or you forgot to record your deposit that you made. Or maybe if there's something funky in there that you don't even know what it is. So keeping up on that. So if you do see something funky, you can call your bank and catch that quickly. And then also checking out your budget versus actual report. So that just is a comparative report against what you created at the beginning of the year to see if you're on track with your goals or if something's changed. So it just helps you analyze where you're at compared to your planning. So after I review these reports with my clients, what I like to do is break up their total profit. And why I like to do that is because I like to have my clients pay themselves. As business owners, we go into business to support our families in our own free time. In a way, we want our freedom, but we should still be having some sort of benefit coming back to us for all the hard work and time that we're putting into this. So paying yourself is really important. And I don't necessarily mean on payroll, because if you're not an S Corp or a C Corp, you shouldn't be on payroll as a business owner anyways. But you can be taking draw checks, and that just means it's not a deductible thing that's going to show up on your profit and loss. It's just going to be on your balance sheet. So you're just going to take money out and you'll be taxed on your profit at the end of the year. So for example, just to throw around some numbers, what I do is take your total profit and break it up. So 50%, you're going to take that as your pay for yourself for the month. Take 30%, keep that in your operating account to use towards next month's expenses. Take 15% of that and move it into a savings account for tax purposes. And then the 5% is like your leftover profit. And that really shows you how well you did that month. With that 5%, it's kind of up to you what you want to do with it. You can put it in savings. You can take it as an extra draw or keep it in your operating account. And then we analyze that every quarter to determine if we're on the right track with the percentages or if we need to tweak those. So it's just like a play with number, just to make sure that you're getting the benefit out of your company. I mean, you're investing so much time and energy into it, and you're the most important key in your business. So you should be paying yourself.
Yeah. And I think that those numbers are super helpful for people to hear. We're not always sure about those things. And so those sort of example numbers, I think, are really helpful. And, of course, we have to have the profit there first, and I know I'm struggling with some of that. So, we understand if people are thinking like, oh, well, my business isn't making enough money for me to take out. But you still have to think about that. That's an important piece. When you can, you need to, and hopefully that's at a point where it can be consistent as it should be as far as yourself, right?
Exactly. Yes.
Okay. So I saw that we had one question from Nicole about, what can be, how should it be handled as far as business finances separate from expenses, personal expenses, especially in a DBA. So this is our next timely question that we were going to ask is, can business owners use business finances to cover personal expenses?
So the general answer is no. If you do use your business card or bank account for personal expenses, The expenses aren't deductible on your profit and loss or your business tax return. So it's nothing that's going to offset anything. And it should just be like a draw. So the best option, if you are going to want to be using your business account for personal expenses, is just to pay yourself. Maybe it's weekly. It depends on your business. And you can figure this out based off of like doing all the budgeting and everything that we've been talking about and just looking at your reports. Pay yourself weekly or monthly, deposit that into your personal account, and then pay your expenses from your personal account. That way they're completely separate. The problem with using your business account for personal things is it really it's not good to commingle the two. It causes red flags, and if you are audited and they see personal items, it's going to cause them to question the deductibility of all of your other expenses. So just keeping them separate is good for avoiding confusion and disorganization, and it's just best practice for audit and accounting purposes.
Yeah, and Nicole followed up too, saying she was kind of asking the opposite question too, right? That they're using personal credit card to cover some of their business expenses. Thoughts about that?
So when you do that, you still need to be accounting for that on your business bookkeeping side of it. And like I was mentioning with the equity account, so it would be like a journal entry. You're going to have your expense. So if you use your personal card for office supplies, I keep saying office supplies because this is the easiest thing. Everybody has office supplies.
Right.
But you use your personal card for office supplies. So you're going to debit your office supplies and account for it that way. And then you're going to say that it came from your owner's equity. You're investing into your company. So just accounting for it that way. It's not going to count as income. It's just your money going into the company.
So that it shows as a separate line item so that you can and go, oh, okay, that was that was my investment here this year. Yeah, kind of thing. Anything else about personal expenses, combining the two?
I just don't recommend it. Try to avoid it.
Right. And if you do, then make sure it's recorded somehow.
Yes, keep track of it for sure. Right.
Yeah. Okay. So next question, when should a business owner ask for that professional help?
So I think regardless of your situation, you should have good relationships with several different financial professionals, including, the SBDC. They have tons of free resources and guides and can lead you in the right direction for all your business needs. I know they have a lot of resources for the PPP loan, and they're a great connection to have. With accountants or bookkeepers, I think it's important to have a good relationship with them because it'll just help you with peace of mind and confidence in your business. It'll help you have that extra time to spend in your business growing it. One thing I want to touch on too is not every business needs a CPA. Having just a bookkeeper on account is sufficient for most of your businesses, especially like the smaller and medium-sized business range. A CPA is more important if you have a larger business or need certified reports for something, or maybe you need an audit to make sure nothing funky is going on, especially if you have maybe a not good relationship with an past employee or that had access to funds. So when you're looking for a bookkeeper who isn't a CPA, it's important to, communicate with them and learn more about their educational background, their professional experience, ask around. Networking is a huge thing for connecting to people in our local community who have a good head on their shoulders, I guess. I personally always do discovery calls with new clients to ensure we're both on the same page personality-wise and business-wise, because not everybody is going to be good for everybody, if that makes sense. There's so many different business owners and so many different accounting professionals. So it's kind of like a trial and error type of thing, just meeting with at least 3 people and just seeing who works well with you. It's kind of same with tax preparer. It's good to have a good relationship with them because they're going to need to know everything about your life to be able to file you accurate taxes and to be able to get the best out of the tax law for you, and providing you with tax planning to help going forward so that you know what to expect and how to plan for those taxes. A financial advisor is a good person to have a relationship with. Most of them don't charge anything. It's more of like fees if you sign up for things. But they'll help you with your personal finances and with like business retirement accounts and health savings accounts. So if you have employees, like they're great people to have a connection with. And it's awesome if they're connected with your tax preparer too, because they can work with each other. Also, having a good relationship with your bank, whatever bank you use, having some sort of connection with somebody there, because they're literally holding all of your business finances. So you want them to understand your business so they can get you the most out of your money, making sure you have the best interest rates, line of credits, just ensuring they understand, and you can easily contact them if maybe you see something funky. You can be like, this doesn't make sense to me. So having a good relationship with them. Also insurance agents, those are people I think a lot of people don't think about, but having somebody that understands your business in the insurance world will be helpful to make sure that you are actually protected liability wise, to ensure if something were to happen, they're able to classify it correctly to make sure you're covered. The real key point to know if you need these professionals' help is if you feel overwhelmed or confused by doing any of those tasks by yourself, or you're spending way too much time on those tasks, or maybe you're not feeling comfortable with the current people you're working with. I think those are all signs that it might be time to start reaching out and grabbing referrals and asking people who they work with and what they think about them. Because I think you really just need to be investing in somebody who you trust and can feel comfortable with. And also just knowing too that most business owners are in the same shoes you are in, and most good professionals won't judge you for the circumstances that you're in, because we are there to help you and guide you in the right direction and just be there to continue to watch you grow. So yeah, and I think a great resource to be able to find these professionals are, like I was saying, like networking, referrals, SBDC, and just having conversations.
I'd like you to give us some ideas about, potential tax deductions that some business owners might not be aware of.
Sure. And quick disclosure, if you have any further questions on specifics regarding these, definitely ask your accountant or your tax preparer, because everything depends on your situation, income, age, in just certain situations. So big one that most people know about is the home office deduction. Biggest thing that's not known about it is it has to be a qualified space, which means it's exclusively used for your business. You can't have personal things going on in the area. My biggest recommendation for this is to have, like, if it's like a public place in your home, get some like painter's tape and like block it out. So, and just be like, this is my space, no personal stuff in it. Traditional IRA contributions can be deductible. Self-employed health insurance benefits, if it's in your business's name. Gifts to clients, up to $25 per client. Charitable donations as a business, if you're providing your logo and you're going to be advertised for your donation, you can mark that as an advertising cost, depending on what you get from it. Mileage, keeping track of a mileage log and having oil change receipts. Mile IQ is a great app to use, and it has pinpoints, so it actually tracks where you've been going. You can set up payroll and pay your kids if they are actually helping in your business and working in your business. And you also don't need to pay them taxes if you're a sole proprietor. Just that one's, you just need to be careful with, because you don't want to end up losing a dependent. So just asking for more assistance with that. New this year is paid sick leave. As a small business owner, if you weren't able to work in your business because of COVID related things, you had to take care of your kids, you had to take somebody quarantine, you were quarantined, there's a credit for that, as long as you weren't also an employee getting that same credit. And then also the last thing, if your PPP loan was forgiven, it is not considered taxable income, so you don't have to include that in your income figures.
All right, so we have some time, a few minutes to answer any questions that anybody might have. One question that's come in is, do you think it's a good idea to get a business credit card for vendors who only take credit cards?
I think it really depends. I think it's best to try to avoid debt, especially in the early time of your business. But a solution to that is if you have to get a business credit card for a vendor, specific reasons, go ahead and charge that credit card, but then make sure you're paying it before the 30 days for your statement to avoid having extra fees, all the interest and, all the credit card fees that are associated with credit cards.
Yeah, great. And it doesn't hurt to find maybe a card that has points or rewards or something like that if you're going to, as long as you're paying it off in 30 days too, right? So,
or maybe like the 18-month interest-free cards.
Yeah, right. That too. Lynn is asking, Amanda, are you available for hire as a consultant?
I am open to new clients. Like I was saying, I like to, do like a discovery call, make sure we're on the same page and actually work well together. So yeah, I mean, she can reach out to me.
Great. We have a question from Patricia. She says, I put 38% of my income into a savings account to cover taxes and insurance. Is this enough?
In general, it sounds like it, but I can't say specifically without knowing your full picture.
Right. Again, it's kind of situational. Yeah. As far as figuring out if that's accurate. Yeah. Mm-hmm.
For bookkeeping purposes, how do you account for credit card transaction fees without charging it to the customer?
Just entering them separately. So if you get your statement at the end of the month, you're just going to add that in as a bank fee, or you can categorize it as credit card fees, however, whatever makes sense for you.
Any more questions?
Okay, I own an S Corp. This year I was told by my accountant that I should not take a draw because that takes away from the basis of the business. Can you explain?
Okay. So as far as S Corps, the amount you put into your company is going to increase your basis. And when you take money out of it as a distribution, not payroll, if you're just taking money as a draw, it will lower your basis. So if at the end of the year you file your taxes and you have a loss, you can only claim your loss up to what you have in your basis account.
So Amanda, what you're saying is the more you draw, the less of a documented basis that is left for your business. Basically, is that, I mean, that's layman's terms, obviously. Right. I'm not an accountant, but
yeah.
So the question, so that really this becomes another one of those highly personal questions, whether or not it behooves you from the big picture financially to have less of a documented basis in your business and more money in your own personal pocketbook, right? I mean, that's kind of it, right?
Yeah, yep, basically.